House of Representatives approve Tinubu's 1.84 trillion naira loan request. $500 million sovereign sukuk. Federal Inland Revenue Service introduces a 10% withholding tax on short-term investment interest. Namibia vows to pay $750 million of its debt in a single day. Oil prices little changed as markets are U.S.-China trade talks. Asia stocks mix as power cautious on rate cut. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us at this time. As that time we talk business, and we start by telling you that the World Bank and the Bank of Industry have unveiled a new framework for development finance aimed at unlocking private capital, deepening inclusion, and spurring job creation across key sectors of the economy. In a statement, the Bank of Industry says the World Bank Country Director for Nigeria, Matthew Varghese, and the Chairman of BOI Board, Mansour Mukhtar, described Nigeria as standing at a defining moment that demands a radical rethink of how the nation funds growth and builds prosperity. Both leaders also commended the government's ongoing economic reforms and urged the adoption of a modern financing model to drive inclusive, sustainable development. Recently, the Securities and Exchange Commission's Expert Committee on Curriculum Review designed a basic course in capital market studies to be taken by all first-year students across Nigerian universities. Chairman of the committee, Professor Uche Uwaleke, says the initiative is inspired by the recognition that awareness and understanding of capital markets remain relatively low, especially among young Nigerians. By introducing the new course, the SEC aims to promote early exposure, foster capital market literacy, and ultimately deepen financial inclusion.
To the National Universities Commission, we express our deep appreciation for their foresight in introducing the Securities and Investment Management Program into the Nigerian university system. This initiative has created a vital platform for nurturing a new generation of capital market professionals and investors. We, however, feel that the NUC gives due consideration to the committee's recommendation, particularly those relating to the inclusion of emerging topics.
Today we are formally recognizing policy harmonization and curriculum design. Indeed, we are placing ourselves in a position to shape the mindset of future generations by making available the core tools that can power informed decision-making and contribute meaningfully to our development as a nation.
Well, I haven't seen that we have Professor Uche Uwaleke in the studio to join us in the conversation this morning, which is on a blueprint for what could be the most significant structural change to the Nigerian capital market, particularly in a world where financial technology and non-interest finance are rewriting the rules. This is as we believe that the recent work of the Curriculum Review Committee under the Securities and Exchange Commission isn't just about updating course titles, but a strategic intervention designed to tackle Nigeria's deep-seated challenge of low financial literacy and a shallow capital base. Joining us to unpack this ambitious vision on how an academic paper can actually turn into real-world economic growth is the chairman of this particular committee, Professor Uche Uwaleke. He is also the director, Institute of Capital Market Studies, Nasarawa State University. Prof, you're welcome to Business Express.
Thank you so much, Benny. My pleasure.
Prof, let's start with the market. At the close of transaction yesterday, the Nigerian exchange saw a slight dip, closing in the negative after a period of robust gains. It's like we are witnessing investor repricing and possibly some profit taking, particularly in banking stocks. Any explanation for that at this moment?
Well, of course, that should be expected. The market behavior is all about, of course, ups and downs. Anytime you find the market, up for a long period of time, you should also expect that some investors will want to take, profit. But of course, the situation is not expected to linger. Any moment, we're also going to see, companies begin to announce their results for the third quarter of 2025, and that is also likely again to spur the markets. Of course, Benny, if you look at the performance of the market thus far, year-to-date return in excess of 50%, that's remarkable, especially against the backdrop of the fact that the returns are actually positive in real terms. Inflation rate at 18.02%, and you have average return from the market at over 50. That tells you the capital market is actually, where to be. And the 50% is even on the average. There are sectors that have done well, above that. Consumer sector, for example, the consumer goods sector has done 100 and over 100% return, since the year began. So all in all, it's a very promising market. It has all the potentials, to drive economic growth, inclusive economic growth for that matter, in Nigeria.
It is. Okay, now to your recent work and talking about market competitiveness and the global alignment, how would the capturing of emerging areas like the non-interest finance, sustainable finance, as well as digital assets translate into tangible capacity that makes the Nigerian capital market much more competitive and attractive, particularly for foreign direct investments?
Yeah, Benny, you see, again, talking about our markets, if you look at where we are today, I just told you about the positives in the last 1 year, but we are still very far. If you look at the major products that we have today on the main bourse, let me even use the main bourse, where you have the equities. Equities market cap is around 98 trillion. You have bond cap, again in the main bourse, that's the NGX, around 51 trillion. Then you have exchange traded funds, that's 1 trillion. So in total, that's about 180 trillion. Now, 180 trillion naira, if you put that in dollar terms, let us even use 1.5, for ease of computation, that gives you about $120 billion. Now, if you have a GDP of $250 billion based on the last rebasing exercise, that means our market to GDP is just around 48%. Compare that to a country like South Africa, for example, where you have market to GDP, equities alone in excess of 300%. And you have an economy where we are targeting $1 trillion economy by 2030. That means, too, that the capital market should also, grow. And it cannot happen when the level of awareness, especially among the youths, is quite low. And that is what informed what the Securities and Exchange Commission, has done. And I must commend the leadership of the SEC, under Dr. Timi Agama for coming up with this idea. The whole thing is the NUC. Of course, the NUC has the overall mandate of developing curricula for Nigerian universities. So all that we have done is to make recommendations. Again, the NUC must be commended for even introducing securities and investment management programs in Nigerian universities, because, as I said earlier on, that will also help to, as I said in my speech, it will help to nurture future professionals and investors in that area. But we realized that curriculum is deficient in the sense that it doesn't reflect emerging areas, the evolving financial ecosystem. So you talked about non-interest finance, yes, you won't find it there. Sustainable finance, you won't find it there. And then even the issue of cryptocurrency, digital assets, mentioned scantily. And of course, we don't find in that curriculum the main law that is driving capital market in Nigeria, which is the ISA 2025. So that is what the SEC has done, to set up a committee to look at this curriculum, review it, and then make recommendations to the NUC, to incorporate this in the curriculum as part of the core. They call the CC Maths, the 70% that is meant for CC Maths. It's not about, say, leaving it to universities to include as part of their 30%, because that won't be done. A number of universities are not in a position to do that. So it's better included, as part of the mandatory, the core curriculum, minimum academic standards, 70% that the NUC is talking about. So that's exactly what we did. We reviewed it, and then we included all these aspects that I said, as I said earlier on, form part of the evolving financial ecosystem.
Particularly areas of digital assets,
yeah,
where
digital
the younger
assets.
generation
Absolutely.
is very interested in.
Yeah.
Okay, now, talking about this compulsory basic course in capital market studies for all first-time students, whether in universities or polytechnics. Yes, you cited the issue of awareness. Then how then would this fundamental course be designed to be captivating enough or relevant enough for particularly maybe a 16 or 17-year-old in a polytechnic or university, and ensuring it genuinely fosters an investment culture rather than just becoming another required course? Should they see it as just additional cost to study? What are the instructions? What's the package like?
Yeah, the package or the attraction is the simplification. Okay, so it's simply a basic course, a foundational course for, as I said, again, a recommendation to the National University Commission to adopt, such that once you're a freshman in the university, you've entered for the first year, you'll be required to to take the course. It's a way of again boosting financial literacy, awareness. You're surprised that Benny, you see, I've been in the university system for long, and I can tell you from experience that level of awareness is very low, even among the courses or programs that you would expect to have that knowledge. Now, talking about business admin, for example, you're surprised that an MBA student is somebody pursuing masters in business admin. So that person must have done a first degree, either in business admin or a related discipline, or even not in related discipline. The person must have even done a postgraduate diploma, and you find that kind of person asking you questions that you don't expect a master student to ask. For example, an MBA student will be asking you, what do you mean by bonds? Bonds. Okay, you're teaching portfolio management, for example, and an MBA student is asking you, he's saying he doesn't know what bonds are. Meanwhile, this is an instrument, a financial instrument that has been with us for years. Companies have been issuing bonds, governments have been issuing bonds, and yet you find people that don't even know about something as simple as bonds. So the idea is to expose students to this at the outset, so that when they before they graduate, of course, they'll be full aware of what these basic financial instruments are. So tomorrow, if the government is raising money through bonds, or companies are also issuing bonds, that kind of student can also, participate. Because when you invest in the markets, you are helping to build, because we call it productive investment, as opposed to what is happening now. You see a lot of them, doing crypto, or you see a lot of them even doing Ponzi schemes. These are unregulated and unproductive investment schemes. As you must have heard, between 2023 and 2024, over $50 billion went through Nigeria, through crypto. Imagine if a fraction of that had gone through the capital market. Productive investment, because when you give money, when you invest in the capital market, you're giving money either to companies for expansion and to create jobs, or you're giving money to the government to improve infrastructure and again further improve the economy. So you are helping to develop your economy when you are investing in the capital market. So it's a win-win thing, and that's also why we commend the likes of Dangote, for example. Dangote, who he's talking today about also bringing his refinery, to to the exchange. His companies are listed on the exchange. That's also one way to contribute to developing the Nigerian economy, because when the refinery eventually get listed, Nigerians can also buy shares in that refinery. So that is the way you have inclusive growth. And the person that will participate in that kind of exercise or venture is one who has knowledge, one who has who is aware of even the benefits of and risks, okay, of even doing that. So that is what we want to do in the Nigerian university system, through the NUC, and I'm happy that SEC, Securities and Exchange Commission, is is championing it. The recommendations are ready, so we expect that the NUC will take it up, from there to ensure that at least as a basic course in the university system, part of the, if you like, GST courses, every freshman in the university will be required to be able to go through that. Yeah.
Okay, Prof, you just reminded me of the push for not just, yes, it's cherry news, Dangote refinery is coming to the market soon. Before Dangote indicated interest to do that, there's been the push for NNPC itself to come to the market. Where are we on that?
Yeah, absolutely. You see, I'm also one person that believes that government should also lead the charge. Okay, if government is doing privatization, it has to be an inclusive one. And the only way you can do inclusive privatization again is, through the, platforms that are available through the capital market. Because when you privatize or you part privatize, you sell to an individual, okay, that is not, you're not promoting inclusion. But when you bring such companies to the markets, okay, you are also enabling Nigerians to take part in the fortunes of that company. So it's also a good thing that the government is thinking of bringing NNPC to the market. It's not going to be, something that will, it's not going to be an event. That's what I mean. It's going to take quite some time if the experience of the Aramco is anything to do by, because proper valuation, has to be done. A whole lot of processes, have to be put in place before NNPC can come. But it's important we should, in my view, roll out the program. We don't know the program. We hear the talk about NNPC being listed, but Nigerians should be able to, have the program, the timelines, the activities that will eventually culminate in the listing of NNPC. If I can tell if NNPC is listed today, the corporate governance will improve, transparency will improve, okay, and that is what Nigerians want for a national oil company. Again, taking a cue from what has happened in Saudi Arabia, what has happened in Norway, and what has happened in Brazil, and some other national oil companies that are also listed on the exchange. So I think it will be a good thing for Nigeria to move speedily in getting NNPC listed on the exchange.
Thank you very much, Prof. We're also looking forward to a better handshake. Well, I call it a firmer handshake between industry regulators as well as the academia.
Yes.
Thank you.
Yes, if you don't mind, let me quickly drop this. That's also part of what we're doing. There's an initiative to start the capital market student ambassadors, in Nigerian universities. That's more like, capital market. Well, it's beyond the capital market club, as a matter of fact. Again, we are starting with Nasarawa State University, Kefi.
Okay, thank you very much, Professor Uche Uwaleke, for your thoughts at this time.
Thank you, Benny.
Moving on, the House of Representatives has given the executive arm of the government the green light for Nigeria to implement external borrowing to the tune of $2.85 billion from international sources to meet the federal government's financial commitments for the 2025 budget. National Assembly correspondent Mitairi Ikpeng reports.
The House, sitting at the Committee on Supply, endorsed the report of its Committee on AIDS, Loans and Debt Management to approve external borrowing by the federal government to finance key fiscal obligations. The approval covers $1.2 billion to partly finance the 2025 budget deficit of 9.2 trillion naira. It also includes $1.1 billion to refinance existing Eurobonds maturing next month and a separate Sukuk loan of $500 million for infrastructure projects. Several bills scaled second reading, including a constitution alteration bill seeking recognition of local government areas and area councils as constituent units of the Federation.
Now, the Federal Inland Revenue Service has directed banks, stockbrokers, and other financial institutions to begin deducting a 10% withholding tax on interest earned from short-term securities. Previously, short-term securities or instruments were exempt from tax to encourage investor returns. Under the new tax directive, the tax will now be deducted at the point of payment on instruments such as treasury bills, corporate bonds, promissory notes, as well as bills of exchange. FIRS noted that investors will receive tax credits for the amounts withheld unless the deduction counts as a final tax. However, interest on federal government bonds remains exempt. Now, the Central Bank of Nigeria has revealed that the Naira is now at its lowest level against the US dollar in 2025. After trading activities at the Nigerian foreign exchange market, the Naira appreciated against the US dollar to close at 1,447 to a dollar. The new exchange rate is a gain of 4 Naira 75 kobo against the United States dollar. In contrast to the preceding days, 1,453 Naira 7 kobo to a dollar. How much is the Naira exchanging for other currencies? Let's see the numbers at this time. The Nigerian Society of Energy Editors Energy Sector Outlook for Q4 2025 indicates that the sector is facing a dramatic final quarter of 2025, just as a historic peace deal offers a bright future for our production, while crisis at the Dangote refinery has put the country on the brink of a national fuel shortage. Let's look at the numbers at this time, where our production is expected to hold steady at 1.62 to 1.70 million barrels per day. But any major security breach, they say, could quickly reverse these gains. Nigeria now relies on the Dangote refinery for more than 60% of its fuel supply, and any more labor disruptions could force Nigeria back to costly fuel imports, gotten the massive 5 to 7 billion US dollars in annual foreign exchange savings the refinery was supposed to provide. This is in addition to inflation risks, where the report says fuel crisis could push the rate back towards 25 or even 26%. The sudden loss of FX savings will put the severe pressure on the Naira, pushing the exchange rate into a weakening band of 1,500 to 1,650 per dollar. And power supply, already struggling at about 4,300 megawatts, will likely be further stressed as businesses and homes scramble for expensive diesel due to fuel shortages. The report recommends that government must resolve the labor crisis immediately to prevent a devastating economic crash from wiping out the hope brought by the historic peace in the Niger Delta. I'll look at the commodities market at this time. Now, Asian stocks struggled for direction after Federal Reserve Chair Jerome Powell cautioned about further interest rate reduction, saying a cut in December isn't a foregone conclusion. A gauge tracking the region stocks was little changed Thursday, while South Korean shares gained after striking a trade deal with the United States. Contracts for U.S. indexes swung in between gains and losses. This is where we end this edition of Business Express. We do value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube and other social media platforms. Business Express returns tomorrow at 3 p.m. Do keep a date with us as we bring you fresh information from the world of business. I am Benny Adams saying, keep thinking and doing business.